Okay. Hi, all. It's so good to have you here. We have an action-packed hour talking through how the coffee supply chain can move to being cashless, and I will be your moderator for this session. Just a little bit about me, if if my pointer allows it. My name is Sjaak, and I manage key initiatives at Decibels in our agriculture portfolio. I design our methodology and approach to understanding farmer experience with digital payments, and I'm so very excited to be here and to be moderating this session where the panel consists of everyone who made this research possible. Um, for those of you who don't know us, we'd love to get acquainted. So this webinar is brought to you by Decibels. We are an impact measurement company that uses 15-minute phone surveys to listen to end beneficiaries of organizations. We're then able to analyze this data and present benchmarked insights within weeks so organizations can respond to what they learn. We're always happy to connect offline if you have questions about our broader work and would like to reach out. But for now, let's set some context on what you can expect in the next hour or so. Our aim for today is to have our expert panelists share a bit more of what they've learned, and then a bulk of the session will be a discussion where we hope the audience can contribute their insights and questions. We have Edom from the Gates team, who will speak about the opportunity for digital payments in the ag space. My colleague Malavika, who will go into the findings from our recent surveys with Arabica farmers in Uganda. Sjaak from the Sucafina Uganda team, who will cover Sucafina's digital transformation. And then we also have Kat from the UN-based Better Than Cash Alliance, who will share more on what companies can think about as they consider going digital. At the end of this, we'd love to hear any questions or notes you might have. And to do this, please use the chat box to post these as and when you think about them. We will be sure to address them at the end. Two other really quick housekeeping things. We will email this recording, so don't worry if you've missed a slide or two. And there will be a survey at the end of this webinar where we will outline the opportunity we have to do this work with other coffee companies. And we'd love for you to register your interest there. With that said, I think it would be helpful for us to, before we sort of dive into the content, for our panelists to learn a little bit more about the audience that they're addressing. Could you please take 30 seconds to answer the question on your screen? It should pop up in your Zoom window in just about a second. Yep. Okay, I wonder if 30 seconds have lapsed. Oh, amazing, right on time. I think these are very interesting results. And I do want to say that a lot of our panelists are going to address, I'm very excited to say that a lot of our panelists are going to address quite a few of these things as and when they speak. For now, I'd love to sort of pass this mic on to Edom, who is a senior program officer with the Integrated Financial Services team at the Gates Foundation, to kick us off. Edom, thanks so much for joining us. I think I'd love for you to talk a little bit more about how agriculture value chains could benefit from digitizing their payments.
Great. Thank you so much. Good morning, good afternoon to everyone, depending on where you are in the world. First off, I want to say thank you for the opportunity to kick off this very exciting webinar on digitizing payments for coffee value chains. So before I start talking about the benefits, I want to quickly just paint a picture of where we are today globally. In terms of global access ownership, account ownership, it has increased by 50% in the last 10 years. So we currently sit at 76% of adults globally with some form of formal financial accounts. When it comes to mobile money, GSMA did a research where they highlighted the account number grew to 1.75 billion in 2023. So all around, this is great news, but access alone is not a convincing factor for digitizing. So now coming to farmers and why they should embrace digital financial services, they need to see meaningful benefits in order for them to embrace it. So today I just want to highlight 4 benefits quickly to kick off the session. The first one is security. So keeping your hard-earned money safe, either when you go to collect the cash or even storing it at home, we know is a very universal concern. So storing your income digitally becomes ideal because you could only withdraw the amount that you would need for immediate expenses and keep the rest safe in your mobile money account. The second benefit is around convenience. So now when we talk about convenience, looking at it from a digital financial service provider's point of view, we know farmers are not the most attractive clientele as they're paid a few times a year and then they tend to withdraw a bulk of their earnings all at once. But if you want to incentivize farmers to keep their money in the digital ecosystem, then digital financial service providers really need to invest in meaningful use cases. So for example, if we take bill payments, they could be a great value proposition. However, we need to design it recognizing that farmers' monthly bills are very different from that of urban customers. But all around, the convenience for farmers can come if they're able to use their mobile money account beyond just receiving payments. The other benefit, and the third one, is the speedy payments. So in any value chain, farmers do prefer to sell their harvest to cooperatives, associations, or exporter. However, if there's any delay in payment, even by a day or two, that could be very stressful because they're in debt and they're in desperate need for cash. So if buyers could invest in digitizing payments, that would really alleviate some of the farmers' pain points. However, it's not just digitization, but this needs to be coupled with accessible agent network and or a merchant network that accepts digital payments, because ultimately you want to build the ecosystem for farmers to be able to take advantage of it. The last benefit I want to highlight is the affordability piece. So cash is free, and we know that rural customers tend to be very price sensitive than their counterparts. So for farmers to embrace digital financial services, then the transaction fees needs to be reasonable. Now, when you look at it from a global perspective, we know that mobile money transaction fee structures tend to favor those that are making one single large transaction rather than small value multiple withdrawals, right? So as digital financial service providers are developing a business model for their rural customers, they really need to keep the price sensitivity in mind, obviously, while keeping their business afloat. So these are some of the benefits that I want to quickly highlight. But in conclusion, farmers are a really critical workforce in most economies that we all work in. So increasing their productivity by digitizing payments is absolutely essential. Thank you for that.
Thanks so much,
Back to you.
Yeah. Thanks so much. I think that's really valuable input. And I'm so glad that you were able to focus a little bit more on the farmer side of things, because we do have results with whether they validate or unvalidate your thesis. We will hopefully can go into that. To do that, I would love to invite my colleague, Malavika Rangarajan. She is an agriculture senior associate here at 6 Decibels, and she led the research that we're going to be presenting on today. Malavika, over to you.
Fantastic. Thank you, Edom, for setting the context so beautifully for the next segment and for the introduction, Ayushi. I'll be spending the next few minutes just talking about our highlights from the surveys that we conducted with Arabica growers associated with Sucafina, Uganda. You will hear more about Sucafina, Uganda in just a bit once we give the mic to Sjaak. Before I go into the insights, I just want to take a moment to set the larger context. So these surveys took place in Uganda. Uganda is relatively advanced in terms of its mobile money ecosystem. It's rated very high on GSMA's Mobile Money Prevalence Index. In simpler words, it's essentially an indicator that tells you the extent of mobile money penetration and usage in a certain country. In addition to that, sort of piggybacking on what Edom had mentioned, the mobile money agent network is extremely critical. And I see someone in the chat box has also pointed that out. In Uganda, the mobile money agent network is extensive and sort of goes across rural and urban regions. 2 years ago, Sucafina took the decision to leverage this infrastructure in Uganda and go cashless when it comes to paying their farmers. They made 2 very strategic choices to help farmers receive digital payments, and this has also helped build loyalty and trust as a byproduct, right? Number 1, they cover the costs that are associated with cash outs. So imagine a farmer goes to a local washing station, sells their produce, and as they receive the payment for their produce, they get the add-on fee that covers the cash out transaction fee that they would have otherwise had to absorb. Number 2, they also dispatch payments within 24 to 48 hours and often sometimes within the same day. So a farmer is able to go cash it out immediately. A little bit on the profile of farmers before I dive into the crux of this presentation. Ayushi, if you could help me with the next slide. Fab. Okay. We spoke to 500 Arabica coffee growers who were paid via mobile money. We conducted phone interviews with these farmers earlier this year, shortly after the peak harvest season had ended. Our sample constituted very experienced mobile money users. So although 3/4 only report having basic phones with basically no internet connection, they had used mobile money on average for the past 8 years for things like receiving payments or sending money. And Sucafina in particular had been paying them via mobile money for the last 2 harvest seasons. So there's a fair degree of experience, comfort, and confidence with this mode of payment. With this reasonable infrastructure in place and farmers' comfort with mobile money, Sucafina had the basics in order to launch digital payments. So what then became the key driver of success is farmers' payment experience. And what we learned is that farmers are by and large extremely happy with digital payments. The chart that you're seeing to your left is essentially telling you that 8 in 10 farmers that we surveyed said that their most recent payment experience with Sucafina was either good or very good, which is, the best outcome. To understand the why, we sort of dug into the qualitative data that we collected as a part of this study. And what we learned is that farmers value digital payments because it's fast, secure, complete, and convenient. So I'll just speak to a little bit of all of these factors. Payments are available to farmers within 24 hours of selling their harvest. So it's dispatched from the selling station. The farmer gets an SMS that sort of tells them that this is the amount they're about to receive. The average farmer typically needs 15 minutes or lesser to get to the nearest mobile money agent and cash out the money. And finally, as I've already mentioned, they receive the full amount, which is to say Sucafina is covering the cash out fee. So they're not incurring anything additional. And the quote to your right sort of speaks to this. But what we also know is that cash remains a preferred mode of payment for a third of the farmers that we surveyed. This group in particular believes that cash payments are fast, they're quick, and they're convenient, and additionally, they don't come with any associated costs. What's particularly interesting with this argument is that Sucafina has tried to address each of these barriers, right? They pay upfront the full cash out transaction fee. And on top of that, farmers receive the money within 1 to 2 days of selling their harvest. So what's really explaining this appetite for cash? That's what got us curious. We discovered that the answer lies somewhere between farmers' reality and their expectations. Sucafina is doing their best to dispatch payments on time, to absorb all cash out fees, but farmers' expectations from digital payments are often informed by their prior experiences with cash. We know that cash is sort of king and it's sort of the most prevalent mode of payment. So expectation setting is what becomes most helpful in this context. So let me dive a bit more on the quickness of cash, for example. We know cash is something that's perceived to be tangible. It's in hand. You sort of get it immediately at the washing station. Digital payments, on the other hand, might take a day or two, and it's not always possible to bridge the actual time gap between what's doable and when the farmer gets the money in hand. But what is possible is to set a clearer expectation around what the timeline of payment is going to be, so farmers are prepared for it and know what to expect. So in other words, it's less about timely payments and more about receiving your payments exactly when you expect it. Then let's talk about cash out fees, right? It's possible that farmers are withdrawing money at different points of the season. But in the Ugandan context, what we learned over the course of data collection is that on specific high value transactions, a farmer could possibly incur an additional government tax or a government cess of sorts, which the farmer has to absorb on their own. From our surveys and anecdotally, what we understood is that farmers who are unaware of this government tax component may conflate this with the mobile money cash out fee. And what this does is it sort of erodes their trust in the payment model because it's not in line with their expectations. All this to say that making people move away from cash to digital is a significant behavior change, which is the bottom line, right? And Sucafina has done a good job addressing these barriers upfront, such as payment timeliness and cash out fee absorption. But this needs to be complemented with ongoing expectation management, at least in the initial years of rollout of digital payments, so that farmers can slowly align their expectations to this new approach of payment. In summary, I just want to leave us with 3 key takeaways. And you should be able to see them on the slide right now. But broadly, we know that a good digital infrastructure is the foundation for successful digital payments launching. But organizations that are considering digital payments should also think about unit economics and making that work for the user, especially when it comes to farmers or generally any low-income user base who might consider digital payments. Sucafina took the route of mobile money provider partnerships, which allowed them to address these challenges up front. You may want to do the same or consider something different. Number 2, it's critical to remember that cash flows are top of mind for farmers. Timeliness of payments matter just as much as unit economics or costs, and that's often why they end up preferring cash, right? Consider KPIs around timeliness of payments and timeliness of dispatching these and hitting their accounts to sort of launch digital payments more successfully. And finally, as with any other behavior change, chances of success are highest when farmers know exactly what they can expect, and there's not a lot of surprises. Setting clear expectations around the cost, any additional tax, timing of digital payments, all of these are critical in creating a seamless experience that is going to drive long-term adoption with time. Over the coming years, 60 Decibels will be collaborating with coffee companies around the globe to understand farmers' experiences with other non-cash modes of payment. We want to understand how they perceive it and whether they are likely to adopt it in the long run. Our hope is to replicate this effort in varied contexts. And on that note, I just want to leave everyone here with this wonderful quote. It's probably one of my favorite ones from the study. This is a female farmer talking about how adoption of mobile money has helped her keep her money safe. That's it from me for now. Over to you, Ayushi. I'm excited to hear from the other speakers.
Thanks so much, Malavika. I think what you mentioned around cash out fees and that being covered is a fairly bold decision. So to absorb cash out fees is critical, like from a business standpoint, moving away from what the convention is. And I'd love to know a little bit more about the thought process that went into that. To do this, I'm going to invite Sjaak, who is the head of sustainability and agronomy at Sucafina, Uganda, also known as UGOF. Sjaak, could you share why the move to digital payments was an important one for your business? I'm sure others in the audience are very curious about this.
No, yeah, of course. And by the way, well explained, both of you. So my name is Sjaak, head of sustainability, working for Sucafina, but responsible for Uganda. I think for us, like if you looked at a trading company like us 4 or 5 years ago, we would have all our coffee indirectly sourced, so delivered by middlemen. The market is pushing us to source more coffee direct. We have maybe 1.8 million farmers in Uganda. We have 15 to 20% market share. And Now, I think in the last 4 or 5 years, we went from 0 directly farmers in a database up to maybe roughly 100,000 in the database. So the moment you're going to go in the field and buy coffee directly from farmers, you need enormous amounts of cash. And it's simply not safe anymore if you have several washing stations and hulling stations to bring like $100,000s on a daily basis in cash. No, that's not safe for your personal. So first of all, cash in field is no longer an option if you decide to push to source directly from farmers. And just we have days at Sucafina where we'll spend between $1 and $2 million a day of buying coffee from farmers. So so doing that in cash, it's literally suicide. Then the other thing has to do with if you run your business, you need a kind of daily reconciliation. So if head office is distributing $100,000 of cash here and 100,000 there, you want to see the same moment or the day after how much cash has been converted into coffee. So from an accounting point of view, the moment you're going to grow your business and you do more direct sourcing in field with collection points, you want to have day-to-day reconciliation to understand where is stock, what have we bought, who needs more cash, do I need to borrow another $1 million from a bank tomorrow, or can I wait 2 more days? Like all these things, super important. So first one, cash in field, just safety, not cool. The other one is accounting, a daily reconciliation. The third one would be kind of traceability compliance. We're seeing more and more, even with EUDR, a deforestation regulation rule, where actually every box or container of coffee that is arriving in Europe needs to have kind of traceability back to the farm plot. And for that, you simply need a transaction, which is then maybe attached to a polygon, a map of a farm. So if you don't even comply with such stuff, and it's super complicated and it goes very in mass and a lot of batching and blah, blah, blah. But if you don't do that, you won't be longer able to export, for example, to Europe. And then maybe the fourth one from a business perspective. So one is really, let me say it again, the safety, the reconciliation, the traceability compliance. But the latter also, like, don't forget, Uganda has a kind of cowboy world. The coffee sector is very open. So the average farmer is maybe only 10% loyal and maybe 10% productive. And basically for us, like the moment you have like cash transactions, you can then calculate who of your farmers are the most promising and the most loyal farmers. And with them, you can create interventions where they might become 5 times more loyal, from 10% market share to 50. And maybe they can become 5 times more productive. So once you have this data available, you can then decide with who do I want to focus. And the potential in it would be to have 10 times more volume with the same overheads, just by offering services. But you need to have a starting point, because if you would work with 200,000 farmers directly, from which only 10,000 are super loyal, it is a waste of your money lending and borrowing all sorts of products to farmers who actually are not really loyal at all. So also for that aggregating reason, yeah, this is the starting point. And without you actually blinding, you're actually lending blindly, which is suicidal for a business. So those 4 reasons are really the reason why we say, okay, cashless is the future. Let's push it. Let's go for it. And I think for the last 3 years, we've been doing it. And now we have that starting point where we actually were able to look at data for 4 or 5 seasons. A year has 2 seasons, and we can make some decisions like, okay, this group of farmers serious. Let's try ABCD. This group of farmers way less serious. Let's offer something, but with way less risk. And yeah, so I hope that's clear. Yeah.
Yeah, that's so helpful, Sjaak. I think what I'm hearing is that it's required for scale, right? Like anytime you want to scale your business, we're moving towards a future where payments are going to be traceable. So making that happen for digitization, as well as trying to do direct sourcing from farmers and making sure they're getting their payments in a secure way, is all required to scale your business. And I think if it is the future, I imagine that a lot of companies are going to want to do it. And
Maybe
hopefully,
I have a small thing to add. For
Yeah.
example, a carbon offset. If you want to do tree planting at scale with Acorn, you need to prove that your coffee came from that farm and on that particular farm. So the transaction is always the core. And maybe also good to know, once we started to go fully digital, we lost 30% of all our farmers. They were like, hell no, we want cash. And now you see the reverse, people line up because actually you are paying digital and the competitor is still in cash. So the first, I'm not saying 100% of the farmers, but the first group of that huge group of farmers is like digital is now actually like knocking our door, like maybe your price is not the best, but the fact that I can have it digital, please, we come and bring our coffee to you. So yeah.
No, that's really interesting. Like that something that was so resistant is now making it a value proposition for your company. Thank you
Yeah.
so much for sharing that, Sjaak. I think, Kat, as more companies are going to consider going digital with what Sjaak has said. And so I'd love for you to give any guidance that you have for our audience on the call. Kat is a program specialist focusing on corporate payments digitization at the UN-based Better Than Cash Alliance. Um, Kat, my question for you is, what are the two most important things you'd recommend companies prioritize as they think about paying their farmers digitally?
Great, thank you so much, and a really interesting webinar that you've facilitated. So thank you for being inviting me to be part of that. So I'd say, to what we've seen in the data, digital payments really does offer huge potential for coffee farmers. Just as we've seen in the cocoa sector, in the tea sector, and elsewhere. But in terms of that additional security and in terms of the timeliness of payments that they receive. But if that transition from cash to digital payments isn't managed effectively, it can fuel divisions, whether that's between the companies themselves and the farmers. That lack of trust in the digital financial system as a whole. It can also increase insecurity and exacerbate inequalities, particularly if products and services are not designed for, say, women farmers in particular. So really, it's essential for companies to play a role here in preparing for a responsible transition. And to do that, we've got a couple of resources at the Better Than Cash Alliance that I'd like to highlight. One is around a responsible approach to digital payments, and we use the 9 principles for digital payments, which sets out some of the most common risk areas and solutions and case studies around how these can be mitigated. The second is a pocket guide for digitizing payments for the coffee sector. And that is something that we've collaborated with the Sustainable Coffee Challenge on. But really, those are both ways in which you can ensure, as a company, you're really understanding what are the specific needs of farmers. It's about building the awareness and the understanding of how digital payments work. It's about making sure you and your company is able to support them through that transition. Having that capacity in-house. It's also around working with the financial service providers to negotiate on the products and services for the farmers themselves. And really, to the point that Sjaak was making earlier, it's about understanding that this is a complete mindset change for farmers. It's not something they're familiar with. We've all been through that when we're coming to adopt new technology. We are a bit cautious, and some will be more open to it than others, and we just have to build on those champions who are willing to support and educate others around them on how to use those services, but also be patient and facilitate choice in the process, making it a gradual transition. But I'll pause there, and perhaps that's something we can discuss a bit further later. Thank you.
Thanks so much for sharing, Kat. I think the companies that are on this call are hopefully going to find the resources that you share as well as those insights very valuable. For the audience, now that our speakers have had their sort of chance to say their expert pieces, we'd love to hear from you. As a reminder, to participate in the discussion, please add your questions to the panelists or any comments you might have in the chat box, and we will be addressing them at this moment. I'm actually going to pass on a few different, so there's a few different questions that have come up. I'm just going to see if we can see. Sjaak, thank you so much for already addressing one of them. I think the point around inaccessibility, Edom, I'd also love your take on this. So the question that says under half of the world doesn't have access to the internet and majority of them fall in Africa. Is there work being done around the issue of inaccessibility?
Let me maybe also, Ayusha, so I answer to that question, like in Africa, in Uganda, the telephone providers have an SMS platform called Mobile Money. So basically, you don't need internet. With an SMS code, you can go to a booth that is every corner of the street and transact your SMS code for cash. And the other way around, if you have cash, you can convert it into an SMS code, and you can send that SMS code to your mom who maybe lives in a refugee camp, and she can catch it at the time. But what you also see, like our software, if we have kind of farmer apps and traceability apps, they work the whole day basically offline in the field. So they're collecting farmer data, transactions, whatever. And at the end of the day, the moment they're in touch with the internet, everything synchronizes and goes. So I think literally we have 500-600 people on a daily basis walking around with smartphones, but they actually work the whole day offline. And the moment they have a moment, things get aggregated. So I think also the apps and the technology nowadays is like really made for super light information, very much offline, and not eating batteries. It's really impressive, and it's already much different than the apps you would have 4 or 5 years ago. It's really taking a very steep curve towards improvement.
Amazing. Thanks so much for covering that, Sjaak. It is true that the technology is really advancing, and hopefully that can be leveraged in a lot of different contexts to start doing this cashless payments. Kat, there's a couple of questions for you, and actually they are on an interest topic of mine, which is around gender and design barriers on mitigating like design errors so it can intentionally serve women farmers better. I think it also ties in well with a question Louis asked around empowerment of farmers. So I'd love for you to address that.
Sure, and apologies, I'm on my phone, so I'm not always seeing the questions. But thank you for summarising. I think really it's sort of calling out the fact that traditionally a lot of data, and particularly as we move into the world of AI, there can be a lot of biases behind the data that financial institutions have when it comes to serving women clients. And more importantly, what we don't have at the moment, or what we're not seeing a lot of, is data collected on women in farming communities, in rural areas. And so when we talk about outreach to farmers without having that insight in terms of what the women's needs are, sometimes we're sort of blindly going into this, designing products and services as we always have done and expecting it to reach everyone. So really, it's about understanding, how do women use technology? Do they have access to phones? In some cases, we're seeing that there's a sharing of mobile phones. And so how do you ensure that the security of any transactions that they're operating through their phones is enough to ensure that their funds are secure? It's about thinking about their ability to use digital technology. In some cases, we're seeing that, in fact, in some cases, we're seeing that women have more interest in using digital technologies because it makes their lives a lot easier. One example would be in the tea sector. I witnessed recently a woman who understood that digital payments, that she could use her phone to make digital payments and pay her bills online. And so she was able to do that from the comfort of her home when it's raining outside or dark outside. So it's a security issue for her, and it's a time-saving initiative. And yet some of the people around her weren't aware that that was even feasible. So, you can in some cases have women as champions for digital technology. And it's not always assuming that they're disadvantaged in that way. But at the same time, it's just understanding, what are their needs, what are their skill requirements, what are their ongoing payment use requirements, particularly around savings and access to credit. And really that's where companies can play a role, because they know their farmers well and they can gather that data. You know, there's questionnaires that we have that can be rolled out to understand what are those user needs, and really ensure that that feeds into any proposal from a financial service provider.
Maybe to add on, I think with us in the coffee sector, we have specific roasters that have specific sustainability interests. If you take, for example, Nespresso, where they're extremely concerned everything to do with human rights, and they have a big gender program. In those particular clusters of farmers, it's even like every transaction would need to have a signature of the man and woman. If not, you don't qualify with their specific AAA certification standard. People want to take a loan, it has to be that a woman is on there with a signature, or there's an incentive. If she adds a signature, we can deduct 3 or 2% interest. So I think the whole digital move is really for companies almost themselves to say, like, if the woman is not included, or if she's not putting a signature under a training, or if you don't schedule the training at moments that women are easily not available, sorry, this is wrong. So I think the moment you go digital, there's a lot of, you know, power play or a motivational power play you can play, right? You can really motivate people with certain incentives and push people to say, like, hey, if the woman is not included, if you don't see a signature, if you don't see your picture, so you're out. Or every family that you've registered where the women, her phone number is missed out, we don't count it. Sorry, Mr. Field Officer, we don't pay you for the results. We need complete results and see it part of it. So that's really, and luckily it's a bit of a push also by our clients, and whatever the clients want is really what we do, even faster. So I think for some particular clusters and clients, it goes way faster than we think and can ever imagine, and it's effective. I do believe so.
Thanks so much for sharing that, Sjaak. And I do think like a lot of our financial inclusion work has also found that something as easy as credit, which women get access to when you register them for a mobile money account, can really sort of empower their position in society. So it does also sort of circle back to that question around empowerment and visibility that we had sort of spoke about earlier.
Yeah, and maybe Ayusha, even like, for example, we have a database with whatever, 60, 70,000 farmers that have active transactions, and you can see their gender and whatever. And what is now happening that even banks are approaching us and say, we have a desire to lend money out to farmers, but we don't have a financial relationship with them, but you have. What if we take your best 10,000 farmers? And could you feed our credit scoring with a kind of API which keeps us up to date about how active and transactional they are? And then as follows, we as a bank at our own risk, we are willing to lend out to those farmers, but then you as a trader tell us what sort of products you want. And of course, then banks have like 20% must really a gender-minded kind of loan product. Think of a cook stove, think of a online saving family pension thing. And so just because we have that starting point for banks, for them it's almost like plug and play and let's go. And yeah, so for us, really the benefit now really start to be generated because all we have is a few transactions, and it's gonna pay off. Yeah.
Amazing. Thanks so much. I think there are a lot of questions in the chat. So I'm wondering how the best possible way to go about it is. Kat, Sjaak, Edom, please feel free to indicate any questions that you might want to take up. But I'll start sort of portioning them to you, and you can let me know if you'd like to pass them along. I think there's an interesting one around how digital payments empower farmers to be better informed on market prices and profit margins on intermediaries. I don't think we've discussed that so far. Edom, I'd love for you to sort of take a first at answering that, and then, of course, feel free the other panelists to add on.
Yeah, absolutely. I think this goes back to the points that have been mentioned in the discussions so far, especially around the research in Uganda and the price transparency and making sure that the farmers are fully aware of when they're getting paid and how much they're getting paid. I think what Sucafina has done in terms of covering the cash out fee is an exemplar. But in the case that's not the situation, then farmers really need to know how much they're going to be charged, because at the end of the day, they don't have a lot of disposable income. So every dollar matters in this case. So for that reason, being informed of the market prices, so in some cases, at an agent point, having a poster with the transaction fee structure, and any other information that would be relevant as they make a decision whether they want to use a mobile money account versus cash is really critical. I don't know if that addresses your question.
No, that's super, super helpful, Edom. Thank you so much. And do you ask this, please? Oh, yeah, Sjaak, go ahead.
And I think important, like it depends a bit which kind of farm software you use. But if it's done properly, it would say like farmer Edom is a lady of X many years old. She has bought so many kilograms of coffee with a base price of X. So the amount that she received was so many kilos times the base price, plus a quality premium of Y, plus a certification premium of X, plus whatever transaction fee of Y. So also depending a bit on the software you use, the amount the farmer is getting is digital payment. It comes hand in hand with a receipt, which this case is an SMS, giving that particular data. And that is something that we have started. It's not always perfect. We need to improve it because these things have like 100,000 variables, and it's a bit too complex yet, but those things could easily tackle that transparency trust issue, right? And also the survey itself was really eye-opening, like, okay, we need to put a bit more effort on this receipts, these estimates, because it's so vital. It could make or break the reputation of your company, but also the reputation of the digital transition you're trying to make. Yeah.
Thanks, Sjaak. Sjaak, there is an echo in your audio, so maybe you could like try reconnecting your audio. I'm not sure if that would help. But yeah, maybe we can test that out in the next question as well. Katherine, there are a couple of other questions, so I'm going to put you on the spot. There's a question around alternative mobile numbers that respondents may have to give to get paid, and whether that poses a risk of security and how you can sort of transpire that. So yeah, be great. And also, I noticed you were unmuting earlier, so anything else you might want to add to already said things?
No, that's fine. Thank you. So yeah, again, I think in terms of how the transition to digital payments is being rolled out needs to encompass things like how are individual farmers going to be paid? What is their preferred channel of payment? What are the sort of situation that they're in, if they're sharing a mobile or if they've got two different numbers. Those are sorts of things that could be ironed out in that initial preparation. But if not, and if we're seeing that actually some of these issues are coming up once the transition has started, it's really about having a strong recourse mechanism in place. And by that, it's about making sure that both the company, the financial service provider, and any other intermediary who works directly with farmers, and where there is that trust relationship, can really work together to reassure them that this issue will be fixed, it will be done in a timely way, and that this shouldn't be something that puts them off digital payments. So really, it's having strong recourse mechanisms in place to address some of those pitfalls. And similarly, with scams, we've been hearing more and more that fraud at higher levels is not so much the issue anymore. It's scams that are being initiated by or where transactions are actually initiated by the user themselves, which is where we're seeing the bulk of challenges coming up. And so again, it's again, repeating myself, it's really about education. It's about financial service providers also taking accountability and looking at how they can put in more protection mechanisms. And again, working with those companies so that there is that trust and reassurance built in, so that farmers are not ultimately paying the price for services that end up being not as good as cash. And so it's really ensuring that that whole user experience is protected and improved on.
That's really helpful as well, Katherine. Thank you so much for sharing that.
Could I, Ayushi, sorry, I was just going to make one more point, going back a couple of questions on the issue around inaccessibility, and just to maybe add a point that we have seen, whilst there is 50% of people underserved in developing countries, we're actually seeing that has shifted. The number of people making digital payments has grown significantly from 35% in 2014 to now being 57% in 2021. And that in sub-Saharan Africa specifically is coming from the growth of mobile money. And elsewhere in the world, we're seeing the growth of neobanks offering cheaper and more accessible services. So I think it's about looking at the trend as a whole and knowing that the reality is that digital payments are coming, they are growing, and they're reaching underserved populations, particularly in rural communities. So it's being mindful of not leaving anyone behind and taking that responsible approach to introducing those services, rather than saying, we haven't got it here, therefore we're not going to do anything. So I just wanted to add that point.
Yeah, if I may quickly add to that point, I think there was an issue that was brought up around access to internet being one of the barriers, but there's also access to phones, right? So not all farmers do have mobile phones, let alone a mobile money account. So in that scenario, then that's a huge barrier. I think Kat mentioned that in some cases they do use one SIM card and then, or even one phone, and then people will have different SIM cards, so they would use it as like a community phone of sort. So in that scenario, then it does come with some risk, but at the end of the day, that's also one of the barriers in a number of African countries.
No, that's really valuable, Edom. And I think that's often forgotten, like there are multiple barriers to getting there. But I think hopefully even with the rise of digital farmer services, that is getting solved for a little bit, because a lot of post-pandemic, I think there has been a growth in a lot of these things. Malavika, there's a quick question on if Sucafina found a change in fraud or complaints coming from farmers with regards to receiving completeness of payments, and if we saw any challenges in the study. So I'd love for you to cover that.
No, I think the other way around. When we were in the empire of cash, then we always had issues like local supervisors, local village chiefs, whatever, making advantage of the fact somebody is walking with a lot of cash through a village. Also internally, in terms of theft, for us, like an average field agent is buying worth $2 million worth of coffee. If below you don't function and we ask you to leave. So can you imagine if on that amount you're playing and nibbling a bit in the African content easily, could send, I don't know, a dozen of kids to school. So for us, it has, sometimes the system is down for 1 or 2 days and we can do nothing about it. Then mostly we compensate the farmers with paying ourselves a penalty and giving them a small inconvenience fee. So I think actually, as a matter of fact, we have way less troubles because of the whole digital thing in terms of reconciliation, safety, whatever. And it's even so if you look at if the farmer is the farmer that will not have a phone, he doesn't need a smartphone, but will not have a phone, then we at one moment of time are going to say, either we give you a phone, but if you're not a phone user, you're not our supplier. We are not interested because our hands are tied without these digital records, we cannot move forward. And we need to invest for the future. We invest in a factory now that is being amortized 9 years later. So you see in, for example, Rwanda operations, we have handed out 20,000 phones and gave them trainings how to use it, because a small little Nokia, you know, those, we call them cabritis here, they would cost maybe $15 or $12, and it's worth the investment or the gift in return for having so much less trouble on your operation, because cash is trouble for an organization like us who are scattered all over the country, right? Most of your workers you see only once a year because they're always like 9 hours, 14 hours away from you. So yeah, for us, it's less trouble, to be honest.
Sjaak, I'd love to supplement some of what you said with what we learned in the study as well. It's interesting that, you know, I was looking at the challenges from the study, the qualitative drivers. We asked farmers, did you face any challenges? And 8% said that they did. And these challenges are largely to do with delays in payment or having high withdrawal charges, both of which are likely an outcome of deferring expectations. The other interesting piece we learned is that because of the advanced mobile money sort of provider system in Uganda, a lot of farmers also talk about receiving timely support from mobile money provider agents, whether that's MTN or Airtel, etc. So yeah, to your point, challenge rate is not that high. And even if there are challenges, it's less to do with fraud and more to do with expectations.
Yeah. And maybe also, like, if you want to go to farmer finance, where transactions are the starting point, then it becomes super complicated. There's all sorts of different providers, you have loan management systems, and to make that step, you really need a lot of bright people in your organization, data analysts, the right systems. Things need to be synchronized with APIs on a daily basis. But the step from just nothing to mobile payments is actually a very small step. But to go from mobile payments to farmer finance, that one brings a lot of complexity. So we were not so scared to make this first small step. We are now just breaking our brain, like, how do we make the next step? Because we're not a bank, we're maybe not even allowed, but the demand is with us. Do we do it ourselves? Do we outsource it? But if we outsource it, what if the other people are spoiling our reputation, our name in the field? So this first step is less scary than you think in a country like Uganda, because the ecosystem of payments and the providers are there. It's literally plug and play. And for 1 or 2 weeks, people are doing a bit. And then all the people in your organization have always been sabotaging the operation and took advantage of cash things. There's no longer a place for them in the company. So all the, sorry for the word, but all the corrupt, rotten apples will be automatically removed, because on a day-to-day basis, that smartphone is doing reconciliation. And yeah, that means there's only a fair play. There's no more cheating the farmers, because unfortunately, it's also often your own people who play those naughty deals with those farmers. So yeah, you're going to get a lot of resistance in your company of the unfair people who've been there for 15 years, 20 years, and who are trusted, but who also had a small side business on playing in a gray area. So that resistance you can expect, but the technical step was for us not, I'm not a techie person, for us it was not rocket science compared to the other steps we are going to make in the coming years.
Oh, that actually makes a lot of sense. I think from a macro perspective also, how it resolves corruption is something that, thanks so much for shedding light on that, Sjaak. I think we are at the 4-minute mark, so I did want to share a little bit about like an opportunity that Decibels is undertaking. And before we just close this out, so it's the last part, and it is exciting. We have a fully funded initiative to do a project similar to the one that we saw for Sucafina Uganda in other companies with other companies in other countries. If you are a coffee company that pays its farmers digitally and would like to understand their experience with your payment mode, please register your interest in the form that's about to be shared in the chat box. We have limited availability for this fully funded initiative, so we will prioritize based on first come, first serve. If you're interested in getting in touch with Decibels outside of this, please do use the same form to leave your details with us, and we'll be sure to circle back. I'd love to thank all of the panelists that we have on this call for such an engaging discussion. Thank you so much, Edom, Sjaak, Kat, and Malavika for joining and for sharing your thoughts. I've learned a lot, and I hope that everyone in the audience is also going back with a lot to think about. Thanks so much to the audience for spending your time with us. If you're in the Western time zone, we hope that your morning brew is extra special today. And yeah, that is the last of it from us. And we'll give you some time back. Yeah, Sjaak, any closing thoughts? Nothing? Okay, anyone else? Edom, Kat, Malavika, anything to add, anything to share?
No, thank you for organizing this.
No, I'm glad we had the chance, and I'm sorry for some of the members who we couldn't answer the questions for, but we hope that this was useful, and some of them got answered through by design. Okay, thanks everyone, and we'll speak to you very soon.
All right, thank you.
Thank you so much.
Bye.